technology is reshaping almost every aspect of modern life, and investing is no exception. What once required phone calls to brokers, piles of paperwork, and access to exclusive financial networks has now become something that anyone with a smartphone can do in seconds. The future of investing is being built right now, driven by powerful technologies like artificial intelligence, big data, blockchain, and automation. And this transformation is not just making investing faster, it is fundamentally changing who can invest, how decisions are made, and what opportunities are available. To understand this shift, it helps to look back at how investing used to work. For decades, investing was controlled by institutions, banks, and professional advisors. Information was limited, delayed, and often expensive. Retail investors had fewer tools and relied heavily on experts to make decisions. This created a gap between professional investors and everyday people. But technology has been steadily closing that gap, giving individuals access to real-time data, advanced analytics, and powerful trading platforms that were once reserved for Wall Street professionals. One of the biggest forces behind this transformation is artificial intelligence. AI is now being used to analyze massive amounts of financial data in seconds, identifying patterns that humans would never be able to detect on their own. These systems study market trends, news sentiment, earnings reports, and even global events to predict potential movements in asset prices. For investors, this means smarter decision-making tools and more accurate insights. AI-driven platforms are also helping automate portfolio management, adjusting investments based on risk tolerance, goals, and market conditions without human intervention. Closely connected to AI is the rise of big data. Every second, the financial world generates enormous amounts of information. Stock prices, trading volumes, economic indicators, social media sentiment, and more. In the past, most of this data was underutilized because it was too complex to process manually. Today, advanced algorithms can analyze this data in real time, turning raw information into actionable insights. This has made investing more data-driven than ever before, reducing emotional decision-making and increasing efficiency. Another revolutionary force is blockchain technology. Blockchain is changing how assets are stored, transferred, and verified. It introduces transparency, security, and decentralization into financial systems. With blockchain, transactions can be recorded on a distributed ledger that is nearly impossible to manipulate. This technology is also enabling new forms of investing, such as digital assets and tokenized securities, where real-world assets like real estate or company shares can be divided into digital tokens and traded more easily. This increases liquidity and opens up markets to smaller investors who previously could not participate. At the same time, mobile trading apps have completely changed investor behavior. Today, investing is no longer something done only on desktop computers or through brokers. People can now buy stocks, cryptocurrencies, ETFs, and other assets directly from their phones. These apps are designed with simplicity in mind, making investing more accessible to beginners. Features like instant deposits, commission-free trading, and real-time notifications have made investing feel as easy as using social media. However, this convenience also comes with new challenges. Because investing has become so easy, some people may make impulsive decisions without fully understanding the risks. Technology can provide information, but it cannot replace financial discipline or long-term strategy. This is why financial education is becoming more important than ever. Investors need to understand how markets work, how risk is managed, and how to build diversified portfolios, even when using advanced tools. Robo-advisors are another major innovation changing the landscape. These are automated platforms that create and manage investment portfolios based on user input. Instead of paying high fees to traditional financial advisors, users can answer a few questions about their goals and risk tolerance, and the system builds a customized portfolio. It then continuously monitors and rebalances the portfolio as needed. This has made professional-level investment management available to a much wider audience at a much lower cost. Social media and online communities have also become powerful influences in the investing world. Information spreads faster than ever before, and trends can emerge overnight. Investors now discuss strategies, share insights, and even coordinate actions through online platforms. While this democratizes information, it also introduces volatility, as markets can be influenced by sentiment as much as fundamentals. This makes it even more important for investors to verify information and think critically before making decisions. Another important trend is algorithmic and high-frequency trading. These systems execute trades in fractions of a second based on complex mathematical models. They analyze market conditions and execute large volumes of trades faster than any human could. While this improves market liquidity and efficiency, it also increases competition and complexity in financial markets. Individual investors now operate in a world where machines play a dominant role in price movements. Cybersecurity is also becoming a critical part of investing technology. As more financial activity moves online, the risk of hacking, fraud, and data breaches increases. Financial platforms are investing heavily in encryption, authentication systems, and monitoring tools to protect user assets. For investors, understanding digital security and protecting personal information is now just as important as choosing the right investment. Looking ahead, the future of investing will likely become even more automated, personalized, and global. We may see fully AI-managed financial systems that adjust portfolios continuously based on global economic conditions. Tokenized assets may become standard, allowing people to invest in anything from real estate to artwork with minimal barriers. Financial systems may become more decentralized, reducing reliance on traditional intermediaries. At the same time, regulation will play a key role in shaping this future. As technology evolves, governments and financial authorities will need to ensure that markets remain fair, transparent, and secure. Balancing innovation with protection will be one of the biggest challenges in the coming years. In conclusion, technology is not just improving investing, it is completely transforming it. From artificial intelligence and blockchain to mobile apps and robo-advisors, every part of the investment process is becoming faster, smarter, and more accessible. But with this transformation comes responsibility. Investors must learn to use these tools wisely, stay informed, and maintain a long-term perspective. The future of investing belongs to those who can combine human judgment with technological power, adapting to change while staying grounded in sound financial principles.